What up, everyone, and welcome back to the Real Estate Unlocked podcast. I'm your host, Joseph Marohn, and today we're going to be discussing a very important topic in real estate, highly requested video, DMs going crazy. Today, we're going to be discussing the topic of private money lenders. Private money lenders are not only crucial to any real estate investor's business, but may be the only solution on why a deal even goes through. Private money lenders are individuals who utilize their own capital for investments such as real estate and profit off the interest that's paid on the loans. Private money lenders are not affiliated with banks or any other financial institutions and oftentimes interact directly with the borrower individually. They are a valuable asset to investors because they often have different approval requirements and a faster pace than traditional financing processes. While the qualifications and interest rates will vary based on the situation, the process of working with private money lenders will be similar to other loans. Now, you know how we do it on the Real Estate Unlocked podcast. If we're going to do it, we got to do it right. We can't just bring on any private money lender. We need to bring on the private money lender. Today, we have a special guest who's a multi-millionaire investor, multi-million-dollar business owner, very successful individual, but you would never know because every event you catch him at, he's out wearing flip-flops. Abraham started his first business when he was just 15 years old, and since then has started, bought, and sold a few hundred other businesses. He also bought his first property at the age of 22, and since then has bought thousands of other properties. He now teaches others how to do the same. So without further ado, I've been talking long enough. Everyone, if you will, please allow me to formally introduce to you Abraham Gray. Abraham, what's up, brother? Glad you can join us today.
Yo, what's up? Good to see you. Good to be here and share knowledge and learn from each other.
Absolutely, absolutely. Well, I appreciate you taking the time out of your busy schedule to sit down and educate my viewers on such an important conversation and topic at hand.
Oh, for sure.
How's everything going with you today?
Yeah, everything is great. Yeah, we had like a little delay. I was supposed to be on a few minutes before now, but we're good. We're all good now.
Now we're all good, brother. We're all good. So, first, just tell us a little bit about you and how you found success at such a young age, man. I mean, most kids are riding bikes, playing video games, or screwing around chasing girls at the age of 15, but you were thinking about money. Tell us a little bit about that and how that mindset came about.
Yeah, no, I was always thinking about money. So, early on, I had like a kind of a rough childhood. And, I went from like foster family, boarding school. And when I started making a little bit of money when I was 15, I realized I was able to do more stuff and have more freedom. And I just always wanted that. I always wanted to be able to do whatever I wanted, not have to listen to people. And making money and having your own money was the way to do it. So I just busted my ass, hustled, and did whatever I had to do to make whatever I can so I didn't have to rely on other people. And boom, here I am today.
That's great, man, because, like I said, most people at that age, their mind is somewhere else, but you were already thinking ahead, and that's how successful people have to think. So it's great you had that mindset early on. So the purpose behind this podcast is to educate newly investors just starting out on the real estate journey and might not have all the resources available to them. So most of the questions asked today are just going to be from a beginner standpoint. And as we continue into the interview, the questions may get a little more detailed. So let's start from ground zero. What exactly is a PML or a private money lender? And why would someone prefer going that route instead of just going to the bank and getting traditional financing?
Yeah, so a lot really is what you said earlier was basically when you go to the bank, banks won't loan on a lot of things. But even if they will loan on it, there's a million like paperwork you have to do and all kinds of fees, and it just takes a lot of time. A PML, you can borrow money and get the money that day. PMLs have all different types of things they'll loan on that banks won't. And they're just easier and faster to deal with. So most people would rather go with a PML, especially if it's a short-term loan or something, because they might, need the money right away. And going through a bank, they can't get it that fast. Plus, some PMLs will give you much better terms, much better interest rates. But more than anything else, they just don't have all the paperwork you have to do to fill out, which is worth it for a lot of people, even if they pay a little bit more. I have to do all that paperwork and get the money faster.
Right. So there's definitely some advantages there. So you said you can get it instantly. When you say instantly, how fast are we talking?
I mean, the right PMO will give it to you the second you ask them. They'll be like, oh, you need that? Here you go. I mean, someone that's like a smart PMO will do some due diligence and figure out the loan. So, I mean, usually it'll take at least a day to a week. But I've done tons of PMLs where I give people money the next day. It's not like super uncommon. If I'm doing it for a property, I'll need the title to be run to make sure that there's no other liens. I'll need to get like security deeds or deed of trust and promissory notes and lender's title policies, all these other things. But you can do all that within a day.
Right. Absolutely. So I could definitely see the advantages there. So, you and I, Abraham, we're a part of an awesome community called Sub 2, right? We have
Yep.
access to a ton of resources and connections. But let's say I'm not a part of Sub 2. How would one even find a private money lender, and where would I begin to look?
Yeah, so obviously the most common thing that people do when they try to find a PML is to go to their family and friends and people that they know really well, because PMLs are really mostly based on having that good rapport with you. Like if you don't trust somebody, you're not going to loan them money. So who's going to trust you the most? Your family and your friends. So that would be the first place to start. The next place I would say is on social media. So I get tons of deals, whether it's PML or other types of deals on social media. I post so much stuff. I let people know what I'm doing. I let people know what I'm successful in. And, a lot of people will respond to me, do you ever need help with something? Can I ever, be part of your deal? Can I partner with you? Can I, whatever, PML with you, something like that. So the reason why I get those people that do that is because I post so much stuff and people see that I'm successful and they want to see if they could, join in. So posting all your wins on social media and all the different things that you do will get you a lot more business, will get you a lot more PML if that's what you're looking for. Of course, going to different events, going to local meetups, going to masterminds, going to networking events are super crucial, because you talk and you find tons of people in there. Some people need money, some people have extra money. Every time I go to an event and somebody asks, all right, who in this room has money to lend? Who in this money needs money? There's literally tons of people raising their hand for both topics. And the amount of money these people have to lend are astronomical. Now, everybody has different criteria. Some want to lend on land, some want to lend on single family, some want to lend on multifamily, whatever it is, but you find the right one for you, and you're good.
See, I think that's the beauty of private money lending, because it doesn't necessarily have to be someone in real estate, right? It could be any type of person with some money that just wants a great return, or maybe, like you said, a family member. So very good advice right there. So let me ask you, so if I've never done a deal before, will private money lender even work with me? And if they do, what might they ask of me?
Yeah, so that's the great thing about private money lenders. You find the right one, they'll deal with you. A lot of private money lenders have a lend box, let's say, where they'll only lend to people that have done deals before, or people that they know they've done deals with. But some people will lend to anyone. So it's just like, if you're in real estate and you're trying to buy a deal, are you going to buy the first deal that you try to buy? Or you buy the second or third? You might need to go through 20, 50, 100 deals to get a deal or two deals. It's the same thing with lenders. You got to find a ton of different lenders and find the right one that fits you. But 100%, there are plenty of lenders out there that will lend to people that have never done a deal before.
Okay, so let's say I do find the one that fits me. What kind of questions should I be asking them?
The only really thing that I would ask a private money lender is, are you loaning money? And if so, what are you loaning money on, and what are your terms, requirements? And basically that's it. After that, you just let them ask you all the different things that they need from you to feel comfortable with you.
Let them do their due diligence. Okay, great. So what's the difference between a private money lender, a hard money lender, and let's say a gator lender?
Yeah, so a private money lender is just a regular person that's not in the business at all whatsoever, and will just loan money because they want to get a better return on what they can get on their money currently. A hard money lender is an institution, a bank, some sort of bank. It doesn't have to be a bank, but someone that has a company that's what they do, and they have a set criteria, and they need a lot of paperwork. And it's more sort of like a bank, right? So you can do like a bank or a regular person. And then a gator lender is someone that is trying to lend money, but only for very, very short periods of time. Like sometimes a day, sometimes up to a month, but not much longer. And they're looking for bigger returns, but for shorter amounts of time. So most gator lenders are lending on EMD loans,
Right.
and those are usually typically 3 to 4 weeks. or double closes, which are basically the same day or next day.
Great. And so are you doing both personally, or are you more on the private money lending side?
I do a lot of both. I actually prefer the Gator lender stuff because it's a bigger return and a faster turnaround. So I do probably more Gator lending than anything else, although I do a ton of private money lending too. But the problem with private money lending is no matter how much money you have, you're going to run out of money at some point. So
Right.
I keep like $10 million of my own money that I lend out to people for private money. But it's literally like most of the time that $10 million is out. So I'm only lending on new deals as I get paid on some of the deals that I already have out. I mean, if I had $100 million, I'd still run out of money because then there'd be more people now. So, but with Gator lending, it's really hard to run out of money because you get the money turned so fast. So I really like that model.
I just want to clarify real quick, back that up. You said $10 million, right?
Yeah.
That's awesome, man. You're the right private money lender to have on their books, right?
No. So my lend boxes, I only lend in first position, and I only lend for deals in Georgia. 95+% in the Atlanta market, but I only lend in Georgia. So I never lend money outside of Georgia. But in Georgia I have, but I literally have way more people that want to borrow money than $10 million.
Right.
So I'm actually starting a fund this month where I'll have probably 50% more, double the amount of money to lend out, but it'll go fast because everybody wants to borrow money.
What kind of fund are you doing?
So if you know Alexis Morgan, she actually is the one that started the fund, and basically she's running it and doing all the paperwork, and I'm basically in charge of just putting the money out and making sure everyone gets their interest every single month and stuff like that. But it's just a fund for people to put money in that we guarantee them 12% return or higher based on different things, but minimum 12%, and they get paid every month or every quarter their interest, and then it keeps going. But all that money is used to do PML on single family homes in first position in the Atlanta market. So I buy hundreds of homes a year in the Atlanta market, so I know how to comp. I know what stuff's worth. I make a lot of money on them. I very rarely do a bad deal. And I know if somebody else is getting a good deal. So if someone's buying a good deal, I'll loan them the money. And then at the worst case scenario, if they don't pay, I only loan them enough to where I know that I would buy it for more than what I loaned them. So I would just foreclose, take the property over, whatever. But I never have to do that because everyone I loan money to knows that they have a lot of equity in it. So they'll never let the home, no one ever not pays me. It makes no sense because they would lose a lot of equity.
Right. Now, that's a smart idea, man, putting that together. So what kind of actionable steps can be taken to build a genuine connection or a trust with this person? And as far as like a business relationship, as it grows and we're doing more deals together, is it possible to get more favorable terms?
Yeah, I mean, depending on the private money lender, like I have a minimum amount that I charge, but I do charge more than that sometimes depending on if the deal I don't like as much. So you just have to find the right private money lender that will charge less. There's private money lenders that will charge a lot less than others, and there's some that need a lot more. Usually the ones that are very experienced and can do a lot of deals will charge more because they have plenty of people asking them for money and they can get it.
Right.
But someone that's a newer private money lender would probably give you a better deal because they just want to get their money out there, and they might not know a whole bunch of people to loan to. So if you're trying to get the best deal, find someone that doesn't have a lot of people always asking to borrow money, and someone that isn't making hardly any money on their money. Whatever you offer them is a lot more, and they feel good about it.
Right. And then, so could you walk beginners through the typical process of applying for a private money loan from the initial inquiry to the actual funding, or is there any applying process at all?
Yes, the process for me goes like this. People ask me, can I borrow money? Are you lending money? And I'll be like, let's say I have extra money to lend at the time. I'll be like, yes, I'm lending. My boxes, it has to be in first position. I charge a minimum of 18% interest, which is 1.5% a month. And, it has to be in Georgia, preferably in the Atlanta market, but definitely Georgia. And then I'll say, send me your property that you want to borrow money on. how much do you need to borrow? What's your exit strategy? And then I'll look at it and see if I think it's a good deal or not. And then I'll need to be connected to a closing attorney here in Georgia. And I'll need them to get me the 4 things I need on every deal, which is the security deed, a promissory note, a lender's title policy, and then, of course, insurance on the property. So once I have those 4 things, the title's run, everything else, I know I'm in first position, then the closing attorney finalizes all the stuff. I give them all the information on the loan, what all the terms are that gets put into the promissory note, and then, of course, the amount gets put on the security deed, it gets filed in the county. I have a first lien on that property, and then, once the fix and flip is over, like 90-some% of my loans are for fix and flips. Once it sells, I get paid back.
Great, man. Is there a particular reason why you only go to, Linden, Georgia? Is that so you can just hunt them down if they're not paying you, or what?
Well, there's a lot of reasons. That's actually a good question. So first off, I know all the laws in Georgia. So when I say all the laws, I know how much you could charge. I know the process to foreclose if someone doesn't pay me, which is really important. A lot of people loan money in all these states. They don't even know what the foreclosure process is if someone doesn't pay you. So I know I actually have foreclosure attorneys on hand that are ready to foreclose. Now, I've done thousands of PMLs. I've only had to use a foreclosure attorney 3 times. And out of those 3 times, 2 people ended up just giving me a deed in lieu back. So I ended up giving me the house back and I worked the deal with them. And the 3rd person, the day before the auction, actually found somebody else to pay me back. So I never even had to foreclose. But it's because I'm very safe with how much I lend people. I lend people an amount that they'd be an idiot to let me foreclose because they're giving up so much of equity. But yeah, that's pretty much the process. But with Georgia, also, I know that it takes me 2 months to foreclose on somebody. If someone doesn't pay me within 2 months, I can get that property sold and get my money back. A lot of states, it could be 6 months, a year, or even longer. So I know the Republican states overall are way more easier to foreclose and get your money back sooner. But I know in some Democrat states, it could take a year, 2 years to foreclose and get your money back. So you just got to know, like, are you comfortable being in a state that can take you that long, or do you not want to? So I would make sure that you know the state, know the laws, have a foreclosure attorney on hand, that you don't have to figure it out if you come to that. But also, again, I loan in first position. If you start loaning in second position, you are going to have a lot of problems. So I used to loan in first and second position, a little bit in second position. And I've done thousands of deals in first position. I've had 3 where I actually had a problem, but I actually didn't have a problem at the end because I was able to get my money back or worked it out before the foreclosure. I've done 50 deals total in my life or less that were in second position. I've probably had problems with 10 to 15 of them. So 20 to 30%. I've had some big problems. On a couple, I never got my money back because of a bunch of different reasons, but it's because second position is a lot tougher for a lot of that. That's a whole other conversation. It could be a long time. But So I really don't loan in second position anymore. It's very rare. Like once in a blue moon, if I know the person really well and it's super secure and whatever, but it's very risky.
No, it makes sense. I mean, you're in Georgia, it's your own backyard, and you know the laws well. So, as you just said, other states have their own laws and whatnot. So makes perfect sense. Okay, so I'm brand new to real estate. I managed to get a deal under contract. I want to be no money out of pocket. Could you explain some common terms and conditions that lenders might offer to newly investors, and how do the interest rates and fees typically work?
Yeah, so I mean, what I see is most people do interest only for a PML until it's paid off. Usually somewhere between a 6-month, 12-month balloon. I always do 6 months, but I always extend it if people are paying.
Right.
I usually see interest rates anywhere from 0.75% a month for people that just are brand new that don't know what they're doing to 2 or 3% a month, in interest. I charge 1.5%, right in the middle. But those are the rates that I see. Obviously, if you know the person well, or if it's someone that's newer, doesn't have ways to put the money out, they're going to give you a better deal and better terms. They haven't done it much, and I don't even know how to protect themselves very well. But that's pretty much what I see. I see that people that know what they're doing are never really get screwed and are pretty much safe. But newer people that are getting into it I see a lot of people lose money. I see a lot of people that don't know what they're doing and loan too much money on a deal, or money in the wrong state, or money maybe not in first position, and they don't understand the risks, or they don't have the right paperwork or something, And I see a lot of people lose money. If they talk to me first, they talk to someone that knows what they're doing first, they can avoid all these issues because there's plenty of ways to do it safely and make a lot of money.
Right. And that's great points you brought up. And that's actually the main purpose of this interview. I want to get more knowledge out there to people so, they're making sure they're protected, right? So would a private money lender fund 100% of my deal?
Yeah. So again, every private money lender is different. I will fund 100% of somebody's deal if they are buying it cheap enough. Let's say the home's worth $100,000. I might loan, let's say, just make the number. Let's say I'll loan up to $70,000 because that's what I feel comfortable on that home. So if they're buying the home for $80,000, I'll loan $70,000. They have to come up the other 10. If they're buying it for $60,000, I'll loan them the whole amount.
Okay. That makes sense. Okay. And then what kind of negotiation strategies can beginners employ to secure favorable terms?
So if you're trying to borrow money, again, it's just figuring out who the right private money lender is for you. If you're going to borrow money from me, I'm never going to go less than 18%. It's just never going to happen. I would borrow money for less than 18% just because I know I could lend it for 18% or more. So if you're trying to borrow money for under that, then you got to find someone that is willing to do it. If you are trying to find someone that's willing to loan you money for a longer period of time, maybe for a few years, if you're trying to do, a buy and hold, then you got to find a different type of money lender. If you're trying to find someone who wants to loan you money in a second position, you have to find that type of money. So it's just a matter of finding the right one. There's really a private money lender out there just for any type of situation, as long as they feel that they're going to make money on it, and they can do better with lending the money than what their money's doing without it.
Right. And it's so we kind of already talked about, if the time frame, it varies, right? Some people will give it right away, some might take a little longer, but how is the money received? Like, should I be sending a check, a direct deposit, wire transfer?
You're talking about the actual lender?
Yeah, the actual lender.
Yeah, so the lender, I mean, in theory, 99% of the time, the money should go through the title or a closing attorney.
Right.
The exceptions would be, this is for the lender sending you the money. The exceptions would be if title or the closing attorney, the reason why you send it to title or closing attorney first, this is the reason why, is because they're going to make sure that they have all the correct documents, the promissory notes, the deed of trust, the title insurance, whatever they need. They're going to make sure it's all filed and all done correctly before that they give the person that's borrowing the money. So that's why you go through title. So that way you have all the documentation. If you need to foreclose, it's all there. So that's why you go through that. However, if you were to have title fill all that stuff out with the buyer, and then title emails you or tells you, look, they signed everything, I'm ready to file it, you could send the money directly to them, then you could send it directly to them. That happens less than 1% of the time. Usually, it's a lot safer to go through title because that title is not allowed to send the money until all that's done. But if title technically tells you that all the paperwork is done and everything's filed, in theory you could wire the person directly because you're protected because everything's filed. But you got to make sure. But that's super rare. I would say 99+% of the time it goes through title, and that's really the reason why. So you're protected. So the person can't get the money, and then all of a sudden they don't pay you, and you try to foreclose, and then the stuff wasn't filed, the stuff wasn't filled out right. That's protection.
Absolutely. If I'm going to be lending money, I'm going to be sending it to the title company just to make sure that, nothing can happen, right? They can just run off with your money. But so what kind of due diligence should one undertake before entering into an agreement with a private money lender? And there's a ton of scam artists out here, asking for routing numbers, asking for account numbers. How are both sides protected?
So if you're the borrower, I would never send a private money lender any fees up front. I have never asked anyone for fees ever when I'm doing a private money loan. I basically will wire the money to title, and if there are any fees I charge, it's going to come out of the money I wire. So if I have to wire someone $100,000 and I'm charging $2,000 of fees up front, well, I'm just going to wire $98,000. I'm not going to make them pay me $2,000, and after I get $2,000, now I wire $100,000.
Right.
So everyone that is scamming, every lender that's a scam lender, will be like, oh, you have to pay me money up front. So anytime you have to get money up front, that is a big red flag. There are some times where, hard money lenders and different people like that will ask for money up front. It should be very minimum amounts, and it's usually for an appraisal or something like that they don't want to pay out of their own money. But you just got to be careful that it's not a scam person. If someone asks you for money up front, you've got to really vet them and find out all the different people they've loaned money to, and hopefully you should know some of them to verify that that's not a scam. But sending money up front is a big scam. For a lender, sending money outside of title, sending money directly to the person you're loaning money to is a big red flag for a scam as well. Like I said, there's that one exception where you can do it, but it's super rare that a title company is going to say, okay, I'll do all the paperwork and you can just wire them directly afterwards. That's super rare. I see that happen once in a blue moon, but it's usually like when you know the person really well and you know the title company real well and everybody knows each other really well. But if everyone doesn't know each other really well and you haven't done multiple deals and known each other for a long time, that should really never happen.
That's some great info. Thank you for providing that. What are some effective strategies someone can use to ensure they can comfortably repay the private money loan with the agreed upon terms?
Yeah, so basically the person that's lending the money should underwrite the deal and understand that, look, there's profit in this deal. Look, I am charging this person $2,000 a month. They're probably going to need 6 months, so that's $12,000. They're paying $100,000 for the property. They're spending $25,000 on rehab. So 100 plus 25 plus 12, that's 137. This property should sell for 190,000. So there's 30,000, 40,000 profit after my private money fee. Now, if you underwrite it and you're like, wait a second, after all these fees, there's no profit, you might have a problem getting your money back. You shouldn't have loaned them that much money. So it's basically all underwriting and making sure. So obviously, most private money lenders want to make as much money as possible on their loans.
Right.
There's a fine line. Like, you want to give people a good deal. You want to get a good deal, but you also have to give people a good deal. So if you're charging way too much, you might put them in a position where they can't pay you. So you've got to make sure that there's room for them to make money as well as you to make money, or else it's a bad deal because everyone has to make money.
Right. And so then what would happen if the loan didn't get paid back on the agreed terms? What happens next?
You foreclose. So what I typically would do is I call a person, I try to work it out with them. I'm like, all right, you owe me $2,000 interest. You can't pay it. What can you pay? I can pay $1,000 now and $1,000 when it closes. I'm doing my best. I'm like, all right, fine. Pay me half now and half later. That wasn't the agreement, and I'm going to be a lot more strict with that person giving them loans in the future. But if I see that they're talking to me or they're trying to work something out, then I'll work with them. If they go radio silent, you can't get a hold of them, I just assume that they died. I assume they're dead. And if they're dead, the only way to get your money is to foreclose. So if they don't respond to me, or they can't work any deal that's acceptable to you or me, whoever's loaning the money, then you foreclose. It's really easy to foreclose in Georgia, and that's why I lend here.
Yeah, I'm so glad you brought that up because since we're on the subject of both sides being protected, let's talk about communication and transparency for a second. I'm sure you've seen quite a few lenders in the community been getting burned, and it's just an unfortunate situation. And I don't think it's the borrower purposely just trying to burn that person. I think it's more of a communication and a lack of just being transparent with that lender, right? So how important is communication and transparency between the borrower and the private money lender, and what expectations should beginners set?
It's crucial. Any single time your lender calls you or emails you, you got to respond or answer the call. If not, they think you're avoiding them. So communication is crucial. But the reason why most people that we know that are losing money, they're very new. They don't know what they're doing. They're making a lot of mistakes. They're not doing any of the things I just told you need to do. If they do everything I'm telling you what to do, which is making sure you have all the paperwork done right, go through title, making sure that you comp the property right, and you're only loaning enough to where you know that they can pay you back because they're getting a good. You can't loan money to somebody that paid too much for a property. You can only loan money to people that got a really good deal on the property. So if you're loaning money to people just to loan money to people and you're not seeing if they got a really good deal on a property, that's just like buying a property for more than it's worth. You're going to lose money probably.
Right. And so then when they're asking you all these questions, they're asking it for a reason, right? Because they're trying to do their own due diligence and underwrite the property properly.
Exactly.
So we established that not all private money lenders are the same. Each has their own terms and conditions and how they choose to work with you. What are some key qualities or criteria that new investors should look for when selecting a PML to work with?
Just someone that will do what they need. Someone that they're lend boxes in what they're trying to borrow, but then, obviously trying to find the best terms that they can get, whether it's the best interest rate, the most amount of money, the longer the balloon. So all those things are important for someone looking for a lender, but obviously someone that's looking for a lender is going to search for as many people as they can and then pick the best one that matches up.
Right. And then you talked a little bit about, first position and foreclosing. But how is collateral typically handled, and what types of assets are commonly used as security for loans? Would lenders be okay with taking second or third position, or is it first position always a requirement?
For me, first position is pretty much always a requirement, just because second position can be a real hassle if they don't pay you. I can give you a quick example of a few reasons why, but there are plenty of people in second position. Most of them don't really understand the risks, and a lot of people are newer that do it. So now, would I loan in second position? If it's someone that I know super well, would I loan Pace money in second position? I'd loan it to him in fifth position. It doesn't matter because I know he's going to pay me. But when I loan money in second position to someone that I don't know really well or have done tons of deals with and know that they've done plenty of other loans and paid them up, hell no, I never would. So in second position, this is the reason why you're in really bad shape in second position. I'll give you one quick one, although there's a lot, but we don't have time to go through them all. But just so put in perspective, let's just say a home is worth $100,000, okay? And let's just say you're comfortable lending 70%. So let's say you're comfortable lending $70,000 on this $100,000 home, okay? Cool, in first position. Let's just say now the person already has a loan on the property for $50,000. They need $20,000 more. So they're coming to you and they're like, look, you could be in second position, but look, I know you're only going to lend $70,000 on it, but guess what? I only owe $50,000 in first. I just need $20,000 more. It still falls within that $70,000, so you're still safe, right? Yeah, of course. You think you're safe. You're not, but you think you are. So that's the problem most people have. I'm going to explain to you why you're not safe. So a lot of these people will loan that $20,000 in second position because they still have that $70,000. So there's still $30,000 worth of equity in their minds. So that's the biggest problem. What people don't realize is if somebody isn't paying you on your second position loan, that $20,000 loan, if they're not paying you on that loan, who else do you think they're not paying?
Good point.
They're not paying the first position probably either. Most of the time, if they're not paying the second position, they're not paying the first position. Almost, most of the time. So what happens in this situation? Well, this is what happens. Who knows how long that first position person is going to let that person slide without paying them? Some people might start foreclosure process in a month or two. Some people might let it go for 6-9 months because they're busy or don't know what they're doing or whatever. Or trying to work with the person. But let's just say it goes on for 5 or 6 months. Now, on top of that $50,000 that's owed to that first position, there's 5 or 6 months worth of interest, 5 or 6 months worth of late payments. Potentially at this point, now they're going to hire an attorney, which that's going to be added to the $50,000. Then they're going to hire a foreclosure attorney that's going to foreclose on that, and that's going to be another $5,000. And then you're going to have late fees and all these other things. Before you know it, that $50,000 that you thought was owed to that first position, after the $5,000 for the foreclosure attorney, after the $10,000 that's behind in payments and interest, now instead of owing $50,000, you owe the first position $65,000. So when the second position has to close, and they're owed $20,000, and this home you figure is going to go for $70,000, which it might. The $70,000 might go for in foreclosure, but guess what? $65,000 is going to go to the first position. You're going to get $5,000 that's left in second position. You're going to lose $15,000.
That makes sense. That's a great point that you brought up there. I'm gonna questions even my partner Ash and I ran into early on were if we have our own capital to fund our own deals, is it wise to even utilize a private money lender? Like, why borrow money I now need to pay interest on when I already have the capital to do so? What's your advice on that?
So I would never borrow a ton of money if I have money, with the exception of you always want to have a cushion, some extra money in case something bad happens. So figure out the cushion that you need and keep that cushion, but borrow the rest. So let's say I have $100,000 in my bank and I need $100,000 to buy this deal, but you want to have a $30,000, $40,000 cushion in case some crazy shit happens. Borrow $60,000, keep the $40,000 there, so you have a peace of mind and less stress. So if something happens, you have that extra money. Or borrow the money, borrow the whole 100,000, even if you have the 100,000. The reason why you borrow the whole 100,000 is because maybe you're going to find another really good deal in the next few months, and you don't want to have to find a private money lender then because you have one right now. So you have that extra 100,000 for the next really good deal, and you might lose that really good deal if you didn't have any money to come up with it if you couldn't find a private money lender at that time. So a lot of people will keep that money because there's an opportunity cost that if you don't have it, you might lose money. So those are the two reasons why I would use a private money lender, even if I had my own money. But typically, I would only borrow the amount needed to where I still have that cushion, or where I know I might have enough money to buy another type of deal that I might have before this other deal is done.
Oh, it's a great point with the cushion because, all the time we see, PACE is teaching us like never use your own capital, always use private money lenders, and it's like every time we come up to a deal.
The reason why PACE says that, and it's really smart, is because of the way PACE does deals. Most people don't do deals like the way PACE does deals. If you want to be like PACE and you want to do deals like PACE, you should borrow money for every deal. Why? Because PACE does deal after deal after deal after deal. Right. No matter how much money PACE has, or anyone has, you're going to run out of money. But PACE knows that he wants to keep doing deals, so he'll keep getting new private money lenders, even though he has money, because at some point, he might need to use his money for stuff on deals that he can't get a private money lender for. So as long as you keep getting private money, and as long as you underwrite where you're going to make money with private money lenders, he also looks at it like this. I could do 10 deals with private money lenders and maybe make 10,000 a deal instead of 20,000 a deal, but I'm doing 10 deals, so I'm making 100,000 bucks. But I'd rather do 10 deals and make 100,000 or 2 deals and make 40,000. So that's the way PACE looks at it, and for him, it totally makes sense. But it doesn't make sense for everybody. How many deals can you handle? So some people can do a ton, and then it makes sense for them. But if you only do 1 or 2 deals, then it might not make sense for that particular strategy.
Yeah, and that makes perfect sense because like we're not to the level of PACE, obviously, and the amount of deals we're doing, we have the funding to do so ourselves. So we're like, why take money out from a private money lender and have to pay interest on that when we could just keep funding our own deals for now, and then as we start to scale, then we'll start looking into more private money lending on further deals. Okay, so can you discuss how private money lending can be applied to various real estate strategies such as fix and flips, rental properties, and development projects?
Yeah, so on fix and flips, they're typically around 6 months, loans, and you borrow money and you can pay a high interest because if you're buying it at a good deal, there's a lot of profit in a fix and flip if you're doing the rehab right and you're doing everything right, you know what you're doing. So you can pay a high interest. On a buy and hold deal that you are doing, you really can't pay the same type of interest. That's why I really only do fix and flip loans for 6 months or less. A fix and flipper can pay really high interest because you're making a lot of money, and it's a win-win for everybody. For a buy and hold investor, it's very hard to pay anywhere near what a fix and flipper could pay because you have to have that cash flow. And if the interest is too high, there's no cash flow on a buy and hold. So
right.
You have to find a totally different type of lender on a buy and hold. You have to find someone who's going to loan at a lower interest rate than a fix and flipper, and also someone that's going to loan money out for a longer period of time. Someone that only is making 2, 3, 4, 5%, in the bank, but now could be they'll loan it for 7, 8, 9% to you. But a buy and hold person is fine paying 18%, 15%, 20% because they're making so much more, and they're going to turn it over faster.
Right, and then what would you say as far as like new development projects?
New developments are somewhere in between a fix and flip and a long-term hold because a new development takes longer than a fix and flip, but it's way shorter than a buy and hold. So again, you have to find the person that's going to charge you about what a fix and flip is, a person is, a private money lender is, but hopefully a little bit less. Or maybe work a deal to where, look, I'm going to guarantee you, I see this a lot on fix and flip loans and on the new development loans. They'll be like, look, I don't know if I can pay that type of interest, but I think I might. So what I'll do is, let me guarantee you 9 or 10% interest, but I'll give you 20% of the profit of my deal, or 50% of the profit of my deal. And that way, you can't get hurt, because if you don't make as much money on the deal, you're still making money because you're not paying a high interest. But if you're making a lot of money on this deal, now everybody makes more money, the private money lender and them. So that's another way to work a deal with the private money lender.
Great advice. Great advice there. Abraham, what advice would you give to beginners who are considering utilizing private money lending for their real estate ventures?
I think it's crucial. I think they need to. without, unless you just have a ton of money, most people need a private money lender. So again, start posting stuff on social media, post wins, post positive stuff, go to all these networking events, find these private money lenders. So when you have a deal, then, you have somebody, right there that can fund it.
Right. And that's why I love going to investor events. Every time you go to an investor event, anything you would need in real estate is in that room, right? And you just have it's up to you to make those connections. So that's what I'm constantly every time I'm networking and I'm constantly building my private money list, building my buyers list. I'm always connecting with other people. So great point on that. And you're absolutely correct. So something I like to do is I like to give back to the community and allow them to also have a voice on these podcasts.
All right, cool. Let me give you my cash app then.
Okay, got it. So I'll create a post asking if anyone has any questions on the topic I'm covering, and I'll just shout them out and choose a couple of the questions to ask my guests. So one of the questions, it's actually a two-part question. So Luis Fernandez actually his question was, does a private money lender only offer monthly payments, or will they also defer payments to the end of the term?
So I've seen both. A smart private money lender should always get monthly payments. However, I've seen tons of private money lenders that defer it all to the end. The reason why a smart private money lender will get monthly payments is because it pushes the person to get this deal done faster, because every month they're making a payment and you see that they're capable of making this payment. But if you're deferring it to the end, it's just a lot more riskier for the lender. And I have done that before, but I just charge more money. Like, it's a lot more likely you're going to have a problem as a lender to get your money back. So I would just charge a higher interest.
Good point. And then you kind of, on his next question, you kind of touched on this a little bit. So, but I want to read it back to you. So he says he's spoken to several private money lenders. Most of them are asking for a loan origination fee of 1% to 3% of the loan amount immediately after signing the loan approval agreement letter. This sounds like a scam to me. Am I right?
No, a lot of people will charge a higher interest rate with no fees up front, and then some people will charge a lower interest rate with fees up front. The scam is if they ask you to pay them that 1, 2, 3% before they fund the deal. Typically, if it's not a scam, they'll be like, it's fine to pay that 1, 2, 3%, but it'll come out of the money. So let's say you're borrowing $100,000. Instead of you paying them the $2,000 and then them wiring $100, they should just wire the $98 and it automatically comes out. I have done a bunch of loans where I charge a 2% or whatever origination fee. I've never had the person pay me up front. I've always just wired that 2% less.
Okay, so as long as they're asking for it after you sign the agreement, it should be fair.
Yeah, as long as you pay it, they take it out of the money they're wiring, you're fine. If you have to pay them ahead of time, that's a red flag. Could it be legitimate? Right. It could be, but that's definitely a red flag. That's not how it should work 99% of the time.
Okay, cool. Next question is actually from my partner, Ash, and his question was, what type of deals make sense for them to be a private money lender versus a private money partner, and what do they look for in either case?
Yeah, so most private money lenders, or most people that loan money, just want a guaranteed return on their money. So most people are going to be private money lenders because they just want a guaranteed return. A private money partner is someone that has a bunch of money, doesn't have the time to fix and flip. They want to be a fix and flipper, and they want action in the deal. So they'll loan you money at no interest or very low interest, but they want 1% of the profit. And if you could find someone to be a PMP instead of a PML, I think that's a lot better for the person borrowing the money, because you have no risk. Like, they're putting up the money and they're only making money based on how you do. So it's a lot safer for the person borrowing the money because you don't have to pay interest typically, or very little. But as someone lending the money, they want some sort of guarantee most of the time, and unless they see the deal and it's a no-brainer, great deal, it's harder to get someone to be a private money partner. But there's plenty of those out there. Like I said, you find people that want to be involved in deals, just don't have the time or can't find the deals, and they believe in you and they believe in the deal, and that's how they become a private money partner.
Right. Great points. So awesome, man. Thank you, Abraham, for taking the time to answer all these questions. I feel like private money lending is just such a large topic to cover. So I wanted to make sure that we got the majority of the questions answered here today. That way, newly investors have a better understanding of what to expect and what questions to ask. With that being said, I want to make sure that we're not leaving any questions unanswered here today. Is there anything else we didn't cover here today that newcomers should know, or any specific concerns that you think we should cover today?
I mean, there's a million things we could talk about. I mean, we covered the most important stuff, you know. So I think the most important stuff is what everyone should know, and that's what we covered. But obviously, there's tons of nuances on each little thing, what they are, and obviously, if people have questions on it, we'll answer them all, or we can do another one another day for a more advanced. But I mean, I think anyone that wants to get into it has enough information now to know at least what they should do and shouldn't do, and at least hopefully be safe to where they won't do anything stupid and lose money. But they can always reach out to you. They can always reach out to me, and we could always give them advice as well.
I think that's a great idea, man. Because the purpose, like I said in the beginning, like I wanted this to be more towards, a beginner standpoint. That's why a lot of these questions were like very beginner questions. But as you said, private money lending, there's a lot to it, and I feel like maybe we could do a part 2 on this and get more detailed questions answered. That's a great idea.
I mean, just second position loans are like, we could have hours of conversations about the pluses, minuses, and risk and all that just on second position. We didn't really get into it too much. I talked a little bit just to understand why second position is a lot more risky. But also, if you foreclose and you are in second position, you have to really know who the first position person is. You should be talking to them. You should have known ahead of time. You should know how much they're owed, what their interest. You have to know all these different things, or else you're jumping in blind and you lose a lot of money. But second position is like a whole other story we can talk for hours and hours about.
Right. We can probably do a whole topic and discussion on that alone.
Yeah, for sure.
Perfect. Abraham, where can people find you, and are you still currently open to funding deals?
Yeah, I'm always funding deals. I do gator deals every day. Like, I'm funding double closes and EMD deals every single day, every single week. PML, I still do, but right now I'm pretty much where I want to be with the money I have out. But as I get money in, I loan money out right away. So 100%. If you want to reach me, obviously on Facebook, Abraham Gray. On Instagram, it's Abraham Gray Official. I have a YouTube channel that I've had for almost a year and a half, Abraham Gray, Gray, on YouTube. I answer all my emails, answer all my messages on Facebook, and everything else. So if you have any questions, just reach out to me, and we will we'll answer every question.
Awesome. We'll make sure to plug your YouTube handle on the video here. That way people can reach out to you and check out your stuff, man, because I've been watching your content, man. Is very beneficial. Well, Abraham, it's been an honor to have you on the show. You're an absolute monster in this real estate game. We're all hoping to reach a level that you've already succeeded at, and I wish you nothing but continued success, brother.
Yeah, you too. Thanks for having me.
I hope everyone gained a ton of knowledge from Abraham Gray today. Make sure you guys take a second to like, subscribe, and drop a comment down below so we can reach as many people as possible. I think you guys are going to find a ton of value from this episode, and I want to make sure it reaches as many people as possible. Also, stay tuned for my next episode where we'll be bringing on a powerful speaker by the name of Richie Matthews, and he'll be covering the topic of rental arbitrage and how exactly a subleasing model can work for your business. It's going to be a great episode. Thank you again, Abraham. Have a good day, brother.
Talk to you later. Thanks.